It is 9:01 on August 31st, 2022. This is the reconvening of the budget hearing for the 2023 budget for John Park District. Just so we have a good record, could everybody introduce themselves?
Sure. I can start. John Orris, Executive Director with Jungle Park District. I do want to introduce from my left, Matt McHugh, Deputy Director, Jennifer Pay, our Fiscal Officer, Ms. Carnabucci, Jolene Carnabucci is our newest Park Board Commissioner,
and John Epker from Chaparral, Legal Counsel for the Park District.
So we'll read the numbers at the end. We started the last meeting reading the numbers because we have some continuing business. Let's do the business and then we'll summarize with the numbers. If anything changes, we will make those adjustments at that time. Is that okay?
So you want to do regular business first?
No. We'll do the discussion of the Park District before
then
you
read the numbers. Sure.
Is that okay?
Yeah.
Okay. So if everybody's okay, I'm happy to go first unless somebody wants to arm wrestle for it. So what I think we all decided at the last meeting is to hit the reset button. I think that was kind of the consensus. So we're glad we did that. I want to start out by perhaps suggesting that I deal directly with John from a standpoint of questions on the budget. And John, and if you need resources, I think it'd be more productive rather than getting into arguments and that type of thing. And that way we'll keep it more civil. I don't want you longer than anybody here, so if that makes sense. So if you're okay with that, I think I would prefer to proceed that way. Okay, so I personally have listened to the public's perception of this entire thing. I've had a number of opportunities to talk with members of the public. Their view from the outside, I think, is relevant and important. We are public servants, and as such, we have to listen to our constituents, and their people pay our bills, right? So whether we like what they say or not, I guess, is immaterial. We have to factor it into our equation, and we have to do what we think is right, regardless of outcome or perception from outsiders. So having said that, I guess I don't know if my fellow members of the Budget Commission have had the opportunity, but there was a public recording of your meeting, and I want to address the elephant in the room because I think we need to be on the same page, or at least know where we are now that we're face to face again. I watched the entire video of your meeting, which I think was last week or beginning of this week.
last month, 24 years.
The days are kind of short. And I will say, for the most part, I was very encouraged by what I saw. I was very optimistic of the messaging that I heard. I believe that the majority of that message was as we would have hoped it to be. There was obviously a component in that message that called into question what the intents are. And I think I just want to ask, was your treasurer's public statement, was that a statement of the park board or the board or you as the executive director, or were those personal comments?
It was not.
So it was not representative of the park?
Well,
I appreciate that. And so I feel better going forward knowing that. I mean, I get that people are all entitled to their opinion, but we have to determine whether it's the entity speaking or an individual speaking. And in that regard, I appreciate that. So, I mean, if it's okay, I want to go through a couple of things on the budget, if it's okay. And I'm assuming, you've been an executive director now, how many years?
This is 9 years before the Budget Commission, so yes.
Yeah, so this isn't your first rodeo from that standpoint. I know Lori was here, you were here, and we've had dialogue. And I remember, I think, early when you first took office, and correct me if I'm wrong, it was in the 2014, 2015 timeframe, where I think there was a transition to you as a new director. And at that time, I think, is when the park came to the Budget Commission and asked for a voluntary reduction of a particular levy. I recall reading about it. I wasn't here.
Yeah, there was a reduction in 2012.
For 1 year. And
when my predecessor, Tom Kirk, was executive director, and then there was another reduction in 2019.
Okay, right. Yeah, I'm aware of that one. Yeah, I'm aware of that. different reasons, but yeah, I get it. So if we could, let's move on, and if you could, call up the first screen. So what I'd like to do is, and I'm going to pass out just 2 sheets from your budget. So I think, and I did this at the last meeting, but we kind of got sidetracked, so I'll let this go around. This is actually a copy of what we presented last time. I think we beat this to death quite a bit. If it's okay with you, I think we've determined that the $6,290 variance is due to an accounting change of how it was reported. It appears that, and I'm going to try to encapsulate this. If I'm wrong, please correct me. We are viewing it, and we are audited, so just so you know, that period for the auditor's office is an audited figure. So the state has already come in and looked at our numbers, and so our numbers are aligned with the state. They have indicated that that particular adjustment of $6,290 is a reduction of revenue versus an expense. And although at the bottom of the page, it's the same, right? Whether you put it as an expense or you reduce it as a revenue, the net is always the same because this is where you put it. But when you look at those 2 parameters, we will have a variance because of that. And whether or not your accounting firm, I forget the name, yeah, we can work, Ron can work with you. He's actually done the, where is it? There, you were supposed to be over there.
I took my seat.
So I guess we're happy to work with you. I know Ron is, late last night, it was after 5 or 6 o'clock, where he sent me over the paper trail with Gloria of this particular issue, which I don't know if you have, but we have it for you.
Yes, we do have.
Okay, so it kind of points out what happened. There was a change made of the reporting engine at the state level, which changed how we were being given the numbers, which resulted in our failure to remove fees, administrative fees, and therefore the correction had to be done to the revenue based on that information from the state. And Ron's got the details. It's not significant to your number because at the end of the day, the bottom line is going to be the same. It's the things in between. We're also chalking up the change of beginning balance to some sort of an audit adjustment because we did compare to your audit, which is now published for that window. It's actually the 17-18 period, which I incorrectly stated last time 18-19. Sorry for that. But that period was actually released on 11/18/2021, which indicates that is the correct beginning balance. So the auditor of state must have made some adjustment. We'll call that a day and move on if it's okay with you. So it's simply a misstatement of revenue reversal as an expenditure on your financials, which then when you put it on the sheet, it doesn't align with our numbers. So if you can go to the next screen. So to move on, I guess I want to, you got a copy of this that I handed out. I'm just looking at 2 sheets of your submitted detail of your budget, which, and for your benefit, I blue lined everything. It's pages 11 and 12 of 58 of your submissions. And I blue lined what I would like to at least talk about. So if you look at the first blue line, which is general fund expenditures, those are your total expenditures in the general fund beginning in 2020, going through your budget period of 2023. So you see that? And I've represented those numbers in my first line called general fund expenditures. Those are exactly off of your sheet. So 5.5 million, 5.8 and some change, 7.6 million, and then 7.258 million. Do you agree that those are the numbers off of yours?
Yes.
So I just did some quick math, and what I did was I did a year-to-year variance. What's happening to your total expenditures in the general fund? And you can see from 2020 to 2021, you increased by 5.5%. Inflation, I would guess, whatever the factors are. It's not unusual to see a 5% increase year over year from an entity. The part that did jump out at me, though, that I want to talk about is from 2021 to 2022, you experienced a 30% increase. You went from 5.8, almost 5.9 million to 7.6 million. Can you comment on why that occurred? What happened?
Yeah, sure. We've appropriated, and I'll let Jen jump in after I make the comment, but we've appropriated various grant sources, grant funding sources, so money in, money out, things like extreme restoration, things of that nature. So, we did a big stream restoration at our Bass Lake property. So if you appropriate that money based on those grant fund sources and those grant funds.
So, I guess my question then is, so if you go then from 2022 to 2023, if that was the anomaly that occurred in 2022, your reduction from 2022 to 2023 is down about 4.9%. And I can only find one line item that has not increased in 2023, and that is your grounds facility operating account. So I guess the question I would ask is, if the anomaly that caused the $1.7 million increase from 2021 to 2022 were some grant allocations, why would that continue? Why would that become the default standard going forward? Why would 2023 have that same experience?
Well, the grant sources are affiliated with different amounts, so it's that forecast looking forward. Some years there are more grants, other years that are not. Jen, do you have anything else to add? Go ahead.
Well, I was going to say, one of the things we have, we're in the process of a restoration project, which is kind of a 2-year project. So that one is close to $1.2 million. That those funds are still probably a year or two out. So we're kind of working through that. So John referenced like Beaver Creek and Springbrook were 2 restorations. That was almost $1 million in restoration. And the Veterans Legacy Wood Coldwater Habitat restoration is close to 1.1. So those funding sources, we have to have that money available because it's more of a reimbursement. So that's where maybe the projections.
Would that be in a particular category, line item? I mean, would it be under operations and facilities? Where would that be?
Our restoration, I believe, typically is coming out of our capital.
But here's what I'm seeing, and again, maybe I just don't understand the model. I'm looking at all of your specific numbers, and the categories that I'm seeing is you have an all districts, which Ron explained what that was. It's not really all your districts, it's a subset, it's a hybrid. You have grounds and facilities, you have naturalist planning, you have rangers, marketing, information technology, and admin and personnel. So the categories uniformly went up, all categories went up. Not just a particular project dealing with a grant. You'd think if it was a grant, it would be project-based, right? It would be remediation, mitigation, construction project. I mean, that's how I look at those things. The whole boat rose, not just a component. So that's where my question centers from. If it was one component that caused this, I could attribute it to some event. But because all components rose, I can't contribute it to any of them.
Yeah, I understand what you're saying. In the case of, like, describing it, not a fiscal guy, more of a Parks and Recreation guy, in terms of that grounds and facilities line item, or in terms of operating, some of the expenses this year is we purchased a new excavator for a construction crew. It was about a $70,000 purchase. We did ramp up trucks, so that may be the reason for the 4.9% reduction. Just is not as much capital in terms of vehicles. 70,000 excavator, dollar excavator would not be the case next year.
So, I mean, and again, I'm gonna keep addressing the elephant in the room, because I have spent considerable time the last 2 weeks talking to residents and what questions they would ask. There is it could be reasonably interpreted that had something to do with separation from the county. Is any contributor factor of that increase of 1.7 million as a result of that?
In terms of?
Well, I mean, I'm assuming you had additional costs in accounting services, you had additional costs in IT services. You had to do what the county, in effect, was providing to you at a different rate. And I'm assuming you had to do some infrastructure building. You you were using the county's email, for example, you're using the county's internet servicing, and you had to go out and do those contracts yourself. I'm assuming some of that is loaded into this cost of taking that action.
It's reasonable to say that. I don't know what the exact numbers are, but it's reasonable.
So those are the questions that were being posed to me, is how much did this cost us as taxpayers? And I think that it's a reasonable question to have asked of us. We are all accountable for our actions. I get that there were also some other mitigating factors of projects that are skewing that number, but it would be nice for the public to understand how much of that 1.7 was due to that action. Because everybody that has their own business, is used to ROI and make versus buy decisions. We're used to that. Public in general doesn't really understand government in some regards, but they do understand numbers and why numbers would go up, and then how do you explain it to a taxpayer? So I think that's just food for thought. I'm trying to get in the weeds here, but it's still something that's on my mind as to what is the net effect as a taxpayer of that action, and is that action, is that cost effective? That's the question. I'm just posing that out there. So with that, if we can, let's move on. I did another analysis, and this is actually to your advantage. I guess I want to acknowledge you've sent over a resolution to rescind the reserve, and I'm understanding that money is going back into the general fund, which I'm assuming then the appropriation measures that you had put in place into that reserve fund are neutralized. Is that logical to assume?
Yes.
So because you had appropriated, I believe this year, 1.25 million to be spent. So when that reverts to the general fund, we don't have any record of any supplemental appropriation measure that's doing anything with that money. So what I was looking at is when that happens, it is monies that are not reserved are considered unencumbered cash, for lack of a better, and so we have to test it for need, which is what I'm trying to do. So now I'm going back to as though the reserve was never there. Here's the cash in the general fund. How do we justify that cash? So I did some quick math, and I could be wrong. So I'm the first one to tell you I don't know your model completely. I'm just treating you like I would treat the other 31 when they came to me with a budget with a certain amount of cash. I run some numbers. So I took a look at, just for example, personal services. And I'm assuming embedded in that personal services are things like salaries, benefits, insurances for people, those kind of things. Is that correct, what that is?
Yes, healthcare.
So typically in the county, you've been in the 8 years, you realize we're not driven by income tax. We're driven by real estate tax, right? So the revenue stream, the difference between income tax driven entities and real estate tax driven entities is frequency upon which you're getting your money. That's really the phenomenal difference in your budgeting analysis. So if you were income tax based for, like, you were the city of Chardon, you would have a certain income stream every month because people get their salaries, they get taxes deducted, and then you have some remitting agency that is giving you your cash every month to pay your bills. The struggle that we have as entities that are driven by property taxes, you get 2 shots of money a year, right? A first settlement and a second settlement. And I'm guessing you know this, you don't get your first settlement until almost the end of the first quarter. So you've got to live on whatever cash you have in the bank, January, February, and potentially March, until you get, and I don't think they get advances, is that correct? Yes. So you cannot request even an advance. So you don't even get an advantage over a township who can get a couple of week advance of their money. They get a percentage of that money. So my math says you've got to be holding a minimum of 25% of your personal services in reserves. Now, I personally think 25% is too low because some people actually appropriate 100% of their yearly health care insurance in January, because you don't want to keep reappropriating because you won't do it twice, which means you're going to need more than 25% for the first quarter. I put it closer to 40%. If I did those ranges, I did the math on your personal services, and I show you should be holding this year, 2022, between 1.2 million and 1.9 million in cash in the general fund at the end of the year. You show an ending balance of $834,000. Now again, that's your estimate, and you may not spend all of your money. But I'm assuming the numbers you gave us are fairly accurate. Is there a reason for me not to expect that?
No, they're at.
Okay, so I see you have a shortfall this year alone of between $350,000 and $1.1 million. That's minimum to probably more optimum, for lack of a better term. So then I went and looked at your budgeted term. That's just this year. So then I looked at 2023, and I did the same test. You have roughly the same personal services in the general fund in total. So you need about the same carryover for 2023 going into 2024, which is the term in question on the budget. So if you look at that, you're shorted based on your carryover for 2023 because you only have $475,000 predicted for cash. You're going to be short $720,000 to $1.4 million. And if you add those two shortfalls together, your total shortfall for the 2-year period is between 1.3 and 2.5 million. So this influx now of 1.3 million from the reserve is actually what you need. My math says you can't live without that 1.3 million. You can't. And what I'm saying to you is, my caution is, if your intent is to spend that on buying land, you're going to be in the same boat that you're in now. You're going to be short of money. That's my word. And that's not what I would want for you as a taxpayer, or, I don't think that's what you would want either. So I guess that's my cautionary word based on the numbers you see. So from my viewpoint, I see a definition of need in your carryover. You don't need to actually have another project or a reserve. I think you just needed to budget more realistically to when your cash flow will make you whole. Otherwise, you're going to have to lay people off in this year, next January, February, and March, till you get your first influx of money, if you run to these numbers. Now, again, these are estimates, and then 2024, you're going to have to do the same thing again. And it's actually going to be more severe in 2024. So my comment is, you can't afford spending $1.3 million on new property because you can't survive without it. So I think you need to feed the engine before you expand the engine. John, I think that's a bad sign if you're dropping your phone.
Yeah.
Phone drop. So, and again, this is all barring any additional carryover that the math normally just happens with. I mean, we all know. You always budget, you try to budget worst case, right? You try to overestimate your budget. You try to underestimate your revenue to be conservative. I mean, you could do that to an extreme. But I guess what I'm advising you of is I see you have defined need. Maybe not technically on your paper, but because this money went back into the general fund, it caused me to run through this scenario. I mean, does that make sense?
It does.
I guess my question is, how would you expect to survive going into these 2 years with less than even 25%? I mean, I guess that's the $1 million question. It's actually the $1.3 million question. I mean, if everything happened the way the budget showed, and everything happened this year, you would be short $350,000 at the minimum side and over $1 million at the most.
And quite simply, I don't want to oversimplify it, but part of the answer to that question, and Matt and I both alluded to it, is forecasting some of the grants and the grant sources.
Right.
So.
But the problem with those, and I'm sure you know this, the only predictable source of revenue for you is property tax, right? You can't predict a donation, a grant. I mean, who knows what's going to happen with those? But, you have to consider worst case scenario, and I think this is considering worst case scenario. So anyway, I guess having done all that and having, there's 2 last comments I want to make, and then I'm done, and I'm satisfied with the budget. The first is, I would offer to you as executive director, based on some of this 1.7 million being attributed to the moving of the move towards self-fiscaling, I would propose that you at least consider as a board, or request that you consider as a board, is that cost impact justified to the taxpayer? Does it make sense going forward? Is there a method that you can go to a plan B, and we can learn to work with each other so that we save the taxpayers some component of that 1.7 million. Because I have a feeling that 1.7 million is going to continue. My gut tells me, I predicted about 6 figures for that action a year. It appears that I'm pretty close. Maybe it's not, but from my cheap seat here, I'm seeing you're up about $1.5 million to $1.7 million. Some may be due to these other anomalies, and I will concede that. But I don't see $1.7 million of added work being done. I see added overhead being done. And so I would just ask the board and you to consider, nothing is forever. And we all learn from the public's reaction to things, what is a good thing to do and what isn't a good thing to do. So I would put on the table for you to encourage you to consider coming back under the county to help starve off some of this money that you're spending that isn't going directly to the improvement of the parks. That's just my 2 cents. And the second thing, I guess I would say, and then I'm done, is, circling back to your comment that, the statement by your treasurer was not indicative of the park's messaging. And I thank you for that. I think it does beg the question, though, can you see from the public's viewpoint how allowing basically public comment by a particular person and denying public comment by the people who are actually paying this ticket? I mean, I don't believe your treasurer is even a resident of Geauga. But the people in the audience, those people are the ones who paid for this $1.7 million increase. It just seems to me that it really, the message I got from people that were calling me said, that's what made them angriest, is that public comment was permitted selectively. And, you're being a lawyer, I'm sure we all know the connotations of doing that. We get that you don't lawfully have to allow public comment. We get that. But you have, to a degree. You allowed somebody to give a personal comment, and yet there were people in the audience that probably wanted to say something as well, and they were denied that. So I guess that's how I'll leave it, and that's kind of basically what we're trying to ask of you.
Yeah, thank you for your perspective.
Sure. So I'm done. Hope you guys are quiet. Jeez.
I'm going to read all this.
You're on a roll.
Scott.
Sorry.
I'm looking at the estimate versus actual sheet. I think it might be the second or third sheet.
This chart.
Yeah.
Blues.
It's in this
blues
pack.
the
You
estimate,
probably don't have
black
it.
is
Oh, there it
the
is. It's in yours.
Is that $1.3 million going to come back and be added to the estimated ending cash balance now?
1.3 million is going to come back. We haven't done that.
There was only,
We haven't done
only
this.
91.
I'm sorry.
Yeah, there was only 91.
See, that's kind of where I went down the road of, they actually showed 1.3 million to be transferred into the reserve, and then this year, they appropriated out of that fund 1.25 million. So there's only like a $91,000 carryover. So these numbers aren't right, because that's not necessarily going to be what happens.
The blue number is the Park District's estimate. Right?
Correct.
Right.
From their budget.
2023.
So that, where did that $1.3 million that was going into reserve previously, where is it now reflected?
It's not there, it's not, because first of all, the budget was submitted in a different fund, so it wasn't in the general fund at all. Now it's going to be, but we haven't done the certificate, and these numbers aren't brought to speed.
Okay, so
This is based on the numbers that we did 2 weeks ago. So things have changed.
based on Mr. Walder's observation about the ending cash balance of $475,000, your burn rate's $139,000 a week. That balance pays for 3.5 weeks. Now, we know that it's just an estimated balance, and that in reality, you have sufficient cash to operate. But the budget should honestly reflect what will it cost to pay your people the first quarter. this does not. And it's happened now 2 years in a row. That is not a good trend. We have held other departments to have a better fiscal house. We're going to treat you just like we treat everybody else. You have to show money that is there to pay your people. And that means more than $475,000. And if it's 20% or 25%, whatever that number is, but it needs to be an honest estimate, not a phone. And John, we carry this message to all departments, not just you. That's my biggest concern, honest budget. Nothing further.
Yeah, I don't have a lot on the budget. I guess, I hate to bring up the negative point, but I became very troubled last night and this morning over our public records request. So the last time we had a meeting, I think you guys had done some public records requests on us, what, Friday before the Monday meetings, or and you wanted Chuck's PowerPoints, which I don't think were even done until the morning of the Tuesday meeting. I got it when you got it, just was handed out here, just like this one was this morning. So, and there was quite a bit of consternation from the park board about us not responding to your public records request. That you'd sent on Friday before we had 2 budget hearings on Monday. So we did a public records request with you guys on August 25th. Asking for emails and some other items. You haven't responded. We followed up twice. You have not provided the public records. In the interim, you've asked for public records from us. In fact, you asked for some records from the treasurer's office. And in less than 24 hours, Caroline obtained those records from a box in the basement. We sent them for legal review, redacted them, and sent them to you within 24 hours. And our August 25th public records request, you haven't sent us any of the emails we asked for. And none of the emails are privileged because our public records request specifically asks for emails from third parties. And we have outstanding public records requests to the park board that are how many years old? So while I was going to come in here and really not say much about the budget, I think we should continue this meeting till 4 o'clock this afternoon and I want the emails. I want the emails today. This is ridiculous. Your own policy says that you'll respond to public records requests in 3 days. I don't like information being hidden from me. When we've responded to all of your requests, some of them in less than 24 hours, and we have an outstanding request that's almost equal. So, I got this thing at the fair at noon. I'd come back at 3 or 4 o'clock this afternoon. No reason we can't have the emails by then. We should have had them last week. Where are the emails?
Well, we're reviewing them, we provided, and we did respond.
You haven't given us one, have they given us one email? Not one email.
Okay,
And in fact, I know we have some of the emails because third parties sent them to us, so we know they exist.
So if you already have emails, you're asking for stuff you already have?
No, I believe there's a lot of stuff we don't have. How do I know what we don't have when you don't give us anything?
Okay. Well, we did respond yesterday to the public records request, and we indicate, and the whole conversation, and I was so encouraged, the atmosphere of cooperation, and I know my colleague John Sayer's been talking to Kristen, we've been very encouraged, and we appreciate the cooperation we've got from your office. It's been tremendous, and I really think it's turning a corner. And from my perspective, and I really appreciate Mr. Walter's thoughtful comments today, and I'm looking forward to that moving forward. Frankly, we had some issues opening up we were looking through them, we had some technical issues. We got them to Chris, we got a partial response, she said it was okay to do it on a rolling basis. I don't know if these emails are necessary to resolve what's on the table here. I don't think there's much dispute about what's going on now. If the board wants, I'll we'll try to cooperate as best we can. I just don't think this is, there's been so much progress in cooperation. I regret
Well, it's a
that-
two-way street. I mean,
Yeah.
we gave you, we've responded to we've responded to 100% of their public requests as of now, correct? Okay. So, and they've not given us one email.
If I could, I mean, as you can tell, there are frustrations on both sides, and there has been, and this is going to be a process. This is not something that's going to change overnight. It did rub the board in general backward to be constantly barraged with no disrespect to lawyers speak about, we demand, and here's when we gave you this notice, and here's when we gave you that notice. When the goal is, we don't do what you've been asking us to do for any entity. We don't get barraged the day before a budget hearing. I've never experienced it in my 4 years. It's only been this particular entity. And so, kind of what's good, I think what Jim is saying is what's good for the goose is good for the gander, right? I mean, do I agree with everything he's saying regarding the fairness issue? I absolutely agree. However, I think whatever those documents reveal is immaterial to the numbers on the paper, unless there's something there that I don't understand. I think it's probably going to be, you have to understand, there is some suspicion on our side. And that suspicion, because of the video that was published, caused us to start asking, are these people really sincere? Is this really true? Or are we getting lip service to get a budget approved and we're back to business as usual? And I think I'll repeat my comment I made at the last one. Whatever we do after we leave this meeting is going to be the trend that we set for the next 12 months. So if we go back and behave like we've always behaved, then we're going to have a problem for the next 12 months. And come next year, we're going to get, all this lawyer crap is going to happen, and frustrations are going to rise. Or we're going to have to do a course change. And I started out mine, we're going to hit the reset button. So, I mean, I would, again, Jim, I get your frustration. I'm frustrated by it as well. I'd love to see underneath the layers what really transpired and what was going on. We are privy to some of the emails that went to the state auditor that were not complimentary of this budget commission. So you have to understand the spreading of that bad information. You guys have to own that. You have to own it because you're the authors, your entity. I think that's what Jim is saying. You can't now pretend like it didn't happen. There's no putting the genie back in the bottle. So I would recommend that this board let it go, but maybe hit the reset again. I mean,
Yeah, I'm fine with that. I mean, I'd like, I'll talk about the budget in a minute, but, yeah, I don't know, I guess what I'd do is I'd make a motion that, if we don't receive all our responses to all our outstanding public records requests by noon on September 9th, that the Budget Commission authorize the prosecutor's office file complaint with the Court of Claims.
I think, is that reasonable?
Well, first of all, I appreciate your frustration, Mr. Fleiss. I didn't realize this was this big, that the public records request was this big of an issue for today's hearing. In the spirit of the way Mr. Walder approached it, the way you and council have dealt with Mr. Slater, I want to say we're here to do whatever we can to, as you said, turn the page. So we definitely want to get you what you need, and we will work with Kristen and your office and get this, whatever you need, as soon as we can. Because that's, our goal today was the same page, the way Mr. Wall described it, turn the page and move forward for the people, for the thing. So
That's my goal too, but
Yeah.
I like deadlines, so, I mean, I thought today was a deadline based upon
Can you
our
obtain
letter
those
of the
in
25th.
you basically have 9 days.
I mean, my understanding from the communication is that you have the
It's being
emails,
checked.
but you're completing a legal review.
Yes. Is that, can you
Since
do a
there's
legal
a
review in
third
9
party,
days? Is that
shouldn't be too
reasonable?
long.
That's reasonable.
Yeah, I guess, I don't know, okay, so that's my motion.
I'll second that.
All in favor?
Yes.
Aye.
Okay, moving on to the budget. I still feel the same I did at the end of the last meeting, in that I just think it would be fundamentally unfair to reduce collections when the Park District relied on this reserve fund, which, you know, again, we've talked about it, there's a couple issues with the reserve fund. Can park districts do a reserve fund? I think there's a reasonable, I mean, we have our opinion on that, but that is something that, you know, might be up for some debate. And then there's specifically the reserve fund that you set up, there was, I think, some technical issues with it. So, you know, now that the board's rescinded that and put the money back, I understand that changes, you know, the budget that's presented. But again, is that really fair when that large component has changed after the fact? To ding you guys for that, it's not fair in my opinion. I just don't think that's fair. And, you know, we talk about being fair to the taxpayers, we have to be fair to the entities. And I don't see, I feel like we need to give you another year to kind of get the fiscal house in order a little bit more and align these numbers, and it might be a year or two process, to be honest with you, to kind of get the numbers, because you had a revenue reduction last year, then you've got the reserve fund thing, maybe we can get, you know, some clarification on that, on the reserve funds between now and next year. You know, you've got these overhead increases that Chuck talked about, so there's just a lot going on here, and for us to take some sort of negative action against you, it just, again, would be really unfair. So, I don't want to do that. And honestly, I think it could, because there's so many moving parts to this, I think it actually could hurt the parks. I don't think what we did last year hurt the parks, despite comments to the otherwise, but I think if we did something this year, it could hurt the parks, and that's not what I want to do, and I don't think that's what anybody up here wants to do. We just want you held accountable, but we want, I think we like your product. I think we all like the product.
Yeah, if I could comment on that, and I appreciate that, Jim. I think, I hope, I hope the commission would know that my intention, and this largely represents a wonderful staff, is to invest in park and recreation services for the good of Geauga County. And you know, since I've been executive director, we've seen some projects and end product that the residents of Geauga County definitely appreciate. You know, land's sat vacant, inaccessible to the public. We built Fairfield Woodlands, Wilbur Hollows, so the sentiment resonates. You know, we want the best. We want the best for our community, and you know, I want to work with the members of this commission. And so, you know, thank you for that sentiment, Jim. I appreciate it, because in terms of end product and parks and recreation services, you know, I think we do have the same goal. So, thank you.
You know, it's funny, the people I was been talking to the last couple of weeks about this, some of your biggest critics on being able to voice their opinion. They're also your strongest advocates for keeping money in your pocket. It's an irony that is unbelievable to me. These people all said, we don't get to voice our opinion, but we don't want you to take any money from them. So, you know, so the problem is, and here's what I'll put on the table for you, is if you only have them voice their opinion at the ballot, you're giving them no option, right? Someday you're going to need more money, you're going to go to the ballot. And if they've been stymied, they're going to, regardless of what the law says, of their ability to speak at a meeting, they're going to send you the message the wrong way, right? They're going to actually say, well, then the only way they're going to listen is if we take money. And so I don't want to see that happen to the parks. I think Geauga is very fortunate to have the district that it has. But they're, you know, it's real quick when people start quoting what all the other parks have, leveraging, you know, reserves. They also all have public comment. So you gotta take all of it. You can't just pick and choose the good points. We have that same practice. Trust me, going to open meetings and letting people virtually come in and do questions isn't as bad as you may think it is. It only is as bad if you prevent it. Then they pent up this anger. And you gotta deal with it for a couple of minutes. And so my suggestion is, I'm a big believer in pull the Band-Aid off quick. Don't do it slow. Especially if you're a man, because you have hair in your arms, it kind of hurts. So, but you shave your arms.
This took a turn.
Yeah,
So-
and this is probably not good.
So do we have to change any of their budget numbers? What
No,
are we approving? You're not,
Well,
we're
because
not,
the money that's changing is this year.
because yeah, we're not, the look back,
Yeah,
is not our,
technically, their carryovers, so here's what I would recommend. You might need, let me go through the numbers now. We might need to give you a supplemental certificate for beginning of next year. We might.
they
We're
should
gonna have
do an
the
amended,
first.
they need to do an amended certificate of estimated resources.
Well, we're gonna have to
because
do that
of
for
the-
this year because the money's being pulled into but that's a different certificate. That's for
Yeah.
the current year. The one that we give them in their packet is for January 1. So that may change because we assume a carryover of only $91,000. If they don't appropriate any of that money, we need to re-provide that carryover, which is gonna help their number.
It would be in their first amendment for '23.
They have to wait. For temporaries, they wouldn't have technically that money to be able to
Right.
appropriate.
Yeah, they have to wait
Have to
until.
wait till they
Right.
do their carryover balances.
Right.
So I'm just saying, we could do an amended initial.
We'd have to certify the money.
Well, they're in the process,
They'd have
right?
to submit another budget.
So you're saying we should give them this certificate,
Don't do that.
I don't think they can, I think that they've.
Once it's in,
submitted
it's in, it's
The
done.
budget, you guys can make corrections
So they'll have to
it
wait
at
till
this
the
stage.
first
It's in your
amendment.
guys' hands.
Okay.
So I think whatever you submit as their budget, they're still on that schedule, and whatever you guys approve,
Okay.
that, then any changes to it are gonna have to happen
Okay,
January
so
1.
we do not have an amended certificate for this year for them today, correct?
No, we have the original.
Okay, so we'll have to amend, we'll have to do an amended one to put that 1.3 million back into the.
But is it
We
only
make
the
some
91?
recommendation.
Is
Sorry?
it only the 91?
well, we never
No.
approved,
Okay.
we never
No.
approved the reserve fund one,
Right.
so.
Yeah, that's right, but
Nothing has been certified from
But
the
that
reserve
cash
fund.
didn't go through the general fund, it was never certified.
We
So
need
it's
to-
gotta go back, it's gotta be certified
Yeah,
initially.
you need to
So
do,
make a determination.
Are we talking about the two different
This year.
things? So they have two
This
things
current
pending
year.
with you guys.
Yes.
They need an amended certificate of estimated resources to account for that money and the way that it's come in.
To be accounting for it going into the
For
general.
right
fund.
now, to
general
be able to
fund.
manage it. And then we have the separate issue of tax budget approval.
Yeah, so you're saying,
going
don't
into
touch the tax
2023.
budget going forward, you'll just have to wait till the first amended, which comes out after you give us your final balances, which is not really material. If you have it, you have it, I mean, you've got cash.
that's not a big deal, you just wait till January.
Yeah.
So we should approve this one, they can fix it in January.
Next budget hearing, we'll have to give an amended for this year, and then we'll go
This
forward.
year, yeah, we'll need it, but we can talk about it.
We'll present their budget.
That's up.
Yeah, that's, they've indicated that it's general fund. So,
Okay, in the general fund, they have an estimated unencumbered beginning cash balance of $834,829. They're requesting revenue in the amount of $6,899,575, which we will certify. Estimated expenses of $7,258,920, leaving an ending balance of $475,484. Land Improvement Construction Fund has a beginning balance of $2,548,951. They're requesting revenue in the amount of $50,000, which we will certify. Estimated expenses of $1,500,000, leaving a cash balance of $1,098,951. Their capital reserve account, beginning cash balance of $29,223. No requested revenue. Estimated expenses of $29,000, leaving a balance of $223. Their canine fund has a beginning balance of $78, requesting revenue in the amount of $400, which we will certify. Estimated expenses of $400, leaving a balance of $78. Total millage for tax year '22 is 0.7, 0.9, and 1 for a total of 2.6 mils.
Motion to approve.
Second?
Yes.
Yes.
Aye.
John, here's your certificate for next year. Okay. And you have no levies, so they're gonna get do they get a rate? They're gonna get a rate resolution?
It goes on the county.
Yeah,
It goes on the county. It's
Before we,
Their board has to pass it, correct?
I don't believe so. I think it's stupid.
That's a good question.
Yeah, let's check that. I think their board should have to approve the rate.
Yeah.
Yeah, so
I think there is a
normally,
process
there's
that they have to
every year we
follow.
have to report to the state the rate of taxation. It changes because values change, so you may get something that your board has to approve before what?
Yeah.
I remember last
The
year.
end of
there was
September.
some
End of
process.
September.
Yeah.
So, because you have no levy, otherwise you have to do it twice after the ballot decision. If you do it again, you don't have anything on this ballot, so.
Your staff can communicate that.
We'll
to me
send it.
directly.
Yeah.
We'll send you the documents.
Okay, awesome, thank you.
before we conclude this hearing, are there any members of the public that would like to offer any questions or comments? Online, are there any comments or questions to be presented?
Anybody in here?
We still have regular business though, too.
Well, I
We're
just
gonna run
like-
out of here.
I'd just like to thank the members of the commission for their cooperation and their very thoughtful comments and hard work on this. And Prosecutor Clays, we will get those records to you as soon as possible. And thank you for your time this morning. I really appreciate it.
Thank you. Thanks for reporting us.
You're all welcome to stay for the regular business. We'll see. Lots of very-
It's a good time.
Unless you're gonna talk about the Geauga County Fair.
No, we have a root,
Yeah.
it'll be either this or a root canal, so you can choose what you want.
Thank you. And thank you to your staff.
Thanks, good to see you. See you at the fair.
Okay, any
Yeah, we
other business?
Yes.
Here is, you pass this down.
Very
Yes, those are.
troubling how high the stack is.
Oh, really? That's all today?
This is
Minutes of
the,
August 15th.
Minutes from August 15th.
So moved.
Second, yes.
Yes.
And from the 16th.